We have to use, if you're going more, use unity. Those sponsors use have it's an idea. لا لا it's not all لا لا هو انت في
Yeah, I know. That would be great. Email would be perfect. Yeah, let's join it. I don't know, but I know they send out little text messages every single day, like English word of the day.
Oh, really?
I'm one of the test.
I saw the English email newsletter. That's how I knew about it. So I was like, and then I saw what else?
It's interesting.
Yeah.
You guys can take a seat, we can get started.
Like Philip.
Thank you for joining us for the long. Peter Abuzela. I am the co-chair director of Start Growing Palestine. With actually an international organization, there are over 50 chapters around the world, and as of today, we are officially one of the chapters. So go Palestine! So what Startup Grind does basically, as you saw, is the first hour is networking, and then we bring a different guest every time for them to share their personal story. So it's an innovator, an educator, an investor, an entrepreneur, and anyone that can benefit the community of entrepreneurs. It's also powered by Google for Entrepreneurs. It definitely has a lot of benefits for the community. So just a little structure of how we're going to be doing this. I'm going to introduce Yadin. We'll have a little fireside chat, and then from there there'll be a Q&A session, and then there'll be more networking. Great. So Yadin, thank you for joining.
Thank you. Thanks for having me.
Thank you. So Yadin, I think for the most part, most people have heard of you, but know very little to nothing about you. Can you tell us who is Yadin?
Who is the real Yadin? Okay. So originally I'm an American, born and bred in New York, and did my studies in the U.S. I went to Princeton undergrad, actually majored in French, and then I went on to Harvard Law School, did a law degree, and I did a master's in Middle East Studies, actually, where I studied Arabic, but unfortunately don't remember much of what I learned and haven't had much chance to use it until recently. And then I moved to Israel right after my grad school, a long time ago. In this crowd, I feel bad saying how many years ago, because these guys weren't born when I moved to Israel, but it was 1985. I moved, something I wanted to do for a long time. And you wanted to tell you kind of what else I've been doing? And
Yeah, sure. I think one thing that we're interested in is how did you get into entrepreneurship? I noticed that you did law at Harvard, and it's kind of a big change.
Yeah. I know, I sort of prepared myself for everything but being a venture capitalist or being an entrepreneur. I mean, French undergrad, Middle East studies, law, not exactly the typical career path of a venture capitalist. But when I moved to Israel, I did law for the first year and a half. I clerked for a judge on the Supreme Court, and then I worked at a law firm, and I did the bar, and I got admitted as a lawyer, but I never had any desire to work as a lawyer. And I really went out and looked around to see what I could do that might be interesting. And wow. All right, I'll hold it farther away. So I looked around to see what I might do that was more interesting than working in a law firm, which I really didn't want to do. And somebody put me in touch with a father and son team who had just raised a venture capital fund in Israel. And of course, I had no idea what venture capital is or was at the time. Very few people did. And but you know, as I learned a little bit about what they were doing, namely investing in people who were starting companies in the technology space, it seemed to me that this was the future, you know, that this was where Israel was headed, and there were a lot of good people, you know, thinking about new ideas and starting companies. I was always entrepreneurial myself. I mean, I was starting little companies, you know, whether it was an ice cream business while I was in law school or whatever, all kinds of, you know, things. I was interested in business, although I never had any formal training in it. And frankly, I thought that, you know, it looked interesting, and it would be a good way to learn about the Israeli economy, and maybe it would turn into a career. I never imagined I'd be doing it as long as I did, but it worked out. It was proved to be very interesting.
So when you first joined Athena, it was still kind of a new ecosystem in Tel Aviv, is that correct? I mean, do you remember kind of what challenges you guys faced at that point and how the ecosystem was?
Yeah, absolutely. It was not what you might have heard about as the startup nation today. You know, it wasn't all these big logos of high-tech companies along the road in Herzliya Pituach. In fact, none of those buildings were there in Herzliya Pituach, and you know, it was just a very small community. There had been already some few successful high-tech companies like Elsint and Elron, Fibronics, Optratech, that had already, you know, reached some critical mass and in some cases gone public in New York. But there weren't that many entrepreneurs. There certainly weren't people who had already been successful entrepreneurs who were looking to start new companies. There was no other money around. That fund that I joined, Athena, was the first venture capital fund in Israel. We were the only ones there for the first few years. And, you know, it was, we had to do a lot of educating of the market, right? Explaining to entrepreneurs what venture capital is, why they should bring a partner into their business and, you know, share their baby with an investor, and what kind of value we could add, and what a preferred share was. In other words, how venture capital works and why they should do it. We had to do a lot of that in those days. And, you know, so there were a lot of good things about being the only game in town, the only investor in town, but there were also some challenges that we faced.
Do you see those challenges happening today in Palestine? Or?
Yeah, absolutely. In fact, I mean, I saw and I still see a lot of parallels, you know, between what's going on here today and what was going on in Israel, you know, not that long ago. Mm-hmm. I mean, 25 years ago or 27 years ago, I guess I joined the industry. You know, the main thing, I mean, the main thing on the positive side is having some dynamic, motivated entrepreneurs. You know, that's the number one thing in building a technology ecosystem, and we have that in Israel, certainly, and I think you have it here, or we have it here. So, you know, that's the main positive thing that I see as similar. Some of the challenges are similar too. You know, as I said, not many of these entrepreneurs understand what venture capital can do for them, why they should bring an investor in, how to build a company. You know, a lot of the people we were investing in those days in Israel, as I said, they had no entrepreneurial experience before. In some cases, they had come out of the army, okay, and were looking to commercialize new technologies that they had worked on in the military. In other cases, they were coming out of other sectors of the economy. In some cases, they were just graduating. So it was really a matter of identifying, you know, kind of latent potential, rather than saying, oh, this person has done it, you know, they've made a success before, or they've built a startup before, they can do it again. It wasn't like that. It is today, you know, it's much more like that today. But that's also, you know, that's also a parallel. Of course, there are lots of other similarities. I mean, you have a tiny domestic market here in Palestine, as we do in Israel. I mean, we're a little bigger there, but it's still not a meaningful market. So companies needed to think about exporting from the very beginning. And that means they had to think about, and you have to think about, what you can do or what you can offer that's better than solutions that are being developed, you know, much closer to the market. And that's obviously a big challenge. But if you succeed, you know, if you can meet that challenge of figuring it out, then, you know, you've done something.
So what initiated you to co-found Sadara? Tell us a little about the history. How did it all begin? How did you meet Sad?
Okay, so I think it's a good story. Believe it or not, I started thinking about what turned into Sadara more than 20 years ago. It was actually, I mean, I'm pretty sure I still have the first notes that I wrote about an idea like this, which were from 1992 or 1993. And I guess it may have been the Oslo process or Madrid or whatever, got me thinking about the region, you know, outside of Israel. And again, I mentioned that I had done a master's in Middle East studies, so I studied about it a little bit. And I very much wanted to, or I thought there might be an opportunity to take some of what we had built up in Israel as a high-tech community and use that experience, use that knowledge, use those networks to try to do similar things elsewhere in the region. And the reasons for doing it, first of all, I thought there might be a good business opportunity to do that, or in doing that, because nobody else was doing it, that's for sure. And also I thought it could be good. I mean, it could create jobs, it could create some industry, it could create relations for Israel, perhaps. And so that was kind of the beginnings of the idea. And then, you know, I sort of thought about it, got more excited, less excited about it, was busy doing venture capital in Israel, so I didn't have much time to devote to it. Then I was back in the States for 3 years in the late 90s, came back, then I actually started a nonprofit organization called Tmura that I'm happy to tell you about if you're interested, in the high-tech sector while I was still doing venture capital. Then, you know, kind of, I found somebody to run that, but then second intifada, the timing wasn't exactly right to do this idea of a Middle East fund or a fund outside of Israel. And then about, I guess about 8 years ago or so, I kind of said to myself that, you know, if I want to do this, I've got to get serious about it and really, devote some time to looking into this. And I traveled a little bit in the region. I was in Amman a couple of times. I was in the Gulf a couple of times. And then I started meeting some Palestinians who were in the nascent software industry here. People, you know, like Tarek Maya and Murad and others who were doing outsourcing. And, you know, a bunch of other people. I got to know some people at Taltel, some senior folks there. And, you know, I was really impressed with the people I met. And by the way, before this, I had no exposure to or dealings with Palestinian business people. I mean, none. As an Israeli, you know, there was no contact. But I put my mind to it, and it wasn't that hard to do once I decided I wanted to do it. And then, well, making a very long story somewhat shorter, I decided that what I want to do is try to raise a fund that would invest in Palestinian companies. And the next realization, or kind of immediate realization, was that I needed a partner with whom I could do this. I can't do this, sorry, by myself, from Ra'anana where I live. I'm not planning to move to Ramallah, as much as I like it here. So I started, meeting people who might be my partner in this. And now, a little more than 6 years ago, I had the very good fortune to meet Syed, who I guess all of you know by now. Syed, if not, he's right here. And Syed had just come back from a long time in the U.S. and was doing an outsourcing business here. I, told him about we were introduced by a mutual acquaintance in the Palestinian business community. Told him about my idea to do a venture capital fund that would invest in Palestinian companies. He got excited about it also, and we had great chemistry from the beginning. And really, right away, we decided, almost right away, and this was in March of '08 that we met for the first time, and by October of '08, we were out there starting to fundraise for the fund. So that's kind of how it got started.
Let's talk about fundraising. Many investors are very skeptical about investing in Palestinian startups. How are you able to kind of go around those challenges and get those investors to invest?
Well, that's a good question. And, first of all, we were very upfront with people about what the opportunity was and how we saw it. The big challenge, of course, was that when asking people to consider an investment in the Palestinian technology sector, the big challenge was, well, there isn't much of a Palestinian technology sector, so how are we supposed to evaluate this, right? There was no track record to speak of in Palestine, right? I could tell them about the investments I had made in Israel, and Syed can tell them about all his experience, doing software for Microsoft and others, but there was no track record we could point to. What we could do, however, was talk to people about the opportunity that we saw here. And it was, talking about what's going on in the Arab world more broadly, the very rapidly growing demand for technology solutions, internet, mobile, starting from a very low base, but a big population and growing, the demand growing quickly for technology. We could tell them about the entrepreneurs we had met, the people in the community, about the universities here. And so, that was kind of on the business side, how we sold it how we explained it as a business opportunity. And by the way, it's very important to emphasize, Sadara is this was a for-profit, and it is a for-profit fund. This is not philanthropy. We're not giving out, charity to anybody. We are looking to invest in companies that will make money for themselves, for the people that work in them, and for our investors. So, that was how we kind of explained the business opportunity. At the same time, this was never just about business, never just about making money, not for us and not for the people who ended up investing in the fund, but also, we explained to them, and they very quickly understood the kind of the social impact that a fund like this could have, and that an industry like this could have here in Palestine, in terms of job creation, in terms of building a knowledge-based economy with, jobs that would add a lot of value to the economy, an export-oriented industry here, and we had the good luck to be introduced to some terrific investors, international investors who believe in the potential here, the business potential and the social potential. And you may know our investors include people like the Google Foundation and Cisco and the European Investment Bank and the Soros Group and a number of others. Really, it's a list of investors that would make any Israeli venture fund proud to have. And I see that as a great accomplishment. It's a great testament to the industry here, even though there's still a lot to prove. So it wasn't easy, and it's never easy fundraising at all, and it's not easy raising a fund for something that's never been done before, and it certainly wasn't easy trying to do it in October of 2008 when, if you remember, Lehman Brothers had just collapsed. The world looked like it was falling apart, or at least financial markets did. But we stuck with it, and it took us about a little over 2.25 years, but we closed the fund, which means we started the fund, in February of 2011. So it took a long time, but some good things do.
So you've already invested in about 3 companies, and it seems like you're continuing to invest in Palestine. What do you look for when you try to identify startups in Palestine to invest in?
Okay, yeah, we've made our first 3 investments in companies in Ramallah. 2 of them at least are represented here, which are Yamsafel and Pitchpoint.
Sutel is also represented.
Is it?
Yeah.
Okay. Didn't notice. Okay, hi, great. So all 3 are represented here. And hopefully we're getting close to our 4th investment. And the idea, by the way, is to build a portfolio of about a dozen companies over our investment period, which is another 2-3 years. So in other words, a dozen total companies. What we look for, I think I've already hinted at it. Kind of the most important thing we look for is the people. And in my experience and the experience of other venture capitalists in Israel and the U.S. everywhere, is that what most often separates between success and failure is the quality of the people that are behind the team. And that's the hardest thing to find. It's the most valuable resource. And we think we've invested in great entrepreneurs so far. We haven't made compromises, and we're looking for more people like that. So that's the number 1 thing. Number 2 is those people have to be focused. There are lots of good people who try to do too many things, and it's very hard to succeed, at least as an entrepreneur, if you're spreading yourself too thin, and if you're even trying to do more than one thing. It's hard enough building a successful company. It's very hard to do, and most of them fail, as you probably know. But if you're trying to do that while you're also doing other things, it just adds much too much risk. And so focus is very important. We look for a team rather than a one-person show. No matter how talented, capable, hardworking, smart you are, you can't do it alone because there's just too much to do. So we want people who are able, and who can demonstrate that they're able to build a good team, a great team around them, and who've already demonstrated that they can do that. At least, having a co-founder, let's say, if not a complete management team, and we generally don't see complete management teams yet. So that's very important. The idea is, of course, important also. It's got to be big enough. We tend not to look at opportunities that are focused only on the Palestinian market. It's just too small, and it's not where we can really add value. My experience is all in helping to try to build export-oriented companies and reach markets overseas. I think Syed's experience also is best used in building export-oriented companies. So if the company's focused only on the local market, it's probably not for us. We look for, but yet there has to be some reason that people abroad are going to buy whatever it is this company is trying to sell. So there has to be some real competitive advantage to what the team is trying to develop. And probably you want to find something that isn't being done by 5 or 10 other people already. We look for things that don't need, well, this hasn't been a problem here in Palestine, but in Israel, for example, we need to make sure that the company isn't going to require tens of millions of dollars of capital before it can break even, because our fund is not big enough to support an investment. And I guess I didn't say yet, but our fund is $30 million. We look to invest about $2.5 million per company, okay, over time, not up front, but over time. That's how much we allocate up to that amount per company. So if the company's going to need, and by the way, we also look to bring other investors in with us in companies, maybe not in the initial funding, but as soon as we can, because we think it's important. And so altogether, a company might end up needing more than that, and that sounds like a lot of money, and you probably think, oh, I don't need that much money, but once you start marketing abroad, you end up needing quite a bit of money. So we want to make sure that the funding requirements of the company match our capabilities. I'd say those are some of the most important things that we look for.
So for an investor, obviously having a pipeline of startups is really important. Kind of getting to choose which ones are the best. So in Palestine, one thing is NGOs are focusing mostly on the ecosystem, building it, and for the most part, you're the only for-profit organization. What are your thoughts on NGOs being involved in building this ecosystem?
Okay, that's a tough question. I mean, I think that you know, I'll try to put it, you know, diplomatically. I think that what Palestine needs more of is business-oriented money and money and value-adding money that can help people build profitable, sustainable companies. Now, I'm certainly not denying the need for NGOs to be active here in a lot of things. And by the way, the government, even if you look at Israel, I mean, the government, okay, it's not an NGO, but the government was involved in a very big way, a very important way in driving the development of the venture capital and the high-tech industry there. So there are certainly smart ways in which governments or NGOs can be a positive factor in the development of the industry. But if you ask me, you know, should there be more NGO-backed incubators, accelerators today? You know, probably not, unless they can demonstrate that they can really add value and help entrepreneurs build profit-seeking companies. So, when hopefully one or two of the, or three of the companies in this room that we've invested in, and others, and not only those that we've invested in, you know, once there's some successes, and how do I define a success? I define a success as a business that is, you know, sustainably profitable, that reaches a certain critical mass, a certain scale, and that has an exit. I think it's incredibly important for the industry here as a whole that people see that it's possible to invest money in Palestinian startups and to make money doing it. Once that happens, I think you're going to see a lot more interest. And, you know, by the way, again, to hark back to my experience with Israeli companies, it wasn't that long ago that it was very difficult to convince foreign investors to invest in Israeli companies. You know, now it looks like, oh, startup nation, and everybody wants a piece of this, everybody's taking Israeli companies public and wants to invest, and all the U.S. funds are based in it, you know, have offices in Israel. It wasn't like that all along. And I can remember really not all that long ago when we would take a great Israeli company, or what we thought was a great Israeli company, and try to bring in a co-investor from the U.S., and they didn't want to look at it because, you know, it's too risky and it's not proven and this, that, and the other thing. So, you know, that can change once people see success, once people see that you're able to make money doing this. Do I see more interest today? Look, I think that the more people hear about what we're doing at Sadara, I should also acknowledge Taylor, who's also part of Sadara, who's also here. So, you know, I think what the three of us are doing with Sadara and the companies, you know, what all our entrepreneurs are doing and what all of you are doing, as more and more people know about that, and the word gets out there, then, yeah, there's more interest, because then people understand that, you know, Palestine is not just about conflict and violence and occupation and what have you, but it's also about entrepreneurship. So I'd say there is more interest. And by the way, I also want to point out that, you know, I see among my Israeli colleagues in the high-tech sector and the venture capital sector, you know, when I first started working on this, the reaction from people, and I told people, you know, what I was doing, and that I wanted to raise a fund, you know, to invest in Palestinian companies, or that I just gone to Ramallah, or whatever. People looked at me like, you know, it's crazy. What, you know, why would you possibly want to go to Ramallah, and it's dangerous, and what's there? But now that people have heard more from me and from other people who are, you know, Israeli companies who are outsourcing development work to Palestinian companies, you know, so now that there's been more awareness of this, Now the reaction I get, very typically, is, from people in the high-tech sector is, wow, that's fantastic, and that's just what is needed here, and how can I help? And how can I come to Ramallah? And, so there's tremendous, if you ask about interest, among my colleagues, certainly on the Israeli side, there's tremendous interest in being involved, and hopefully one day in investing also. I understand all the difficulties given the anti-normalization, pressures and so on, and we're certainly not pushing that. But I just want to make the point that there certainly is interest and more awareness, I think, of the potential here. Okay, well, first of all, let me emphasize that, Sadara is not about having companies work together, and we're investing in Palestinian companies, net. That's the goal of this fund. We'll work together, okay? Palestine has, a growing large market in the Arab world that most Israeli tech companies can't access or can't really fully access, let's say. And if they were able to work with Palestinian technology companies, that could be a huge opportunity for them also. So it certainly goes both ways. I mean, the value could go both ways. How to make it happen? Well, the obvious answer is once there's a political resolution, then I guess there's no obstacle to doing any of this, right? The question is, can anything be done before there's a political solution, or at least, a lot of progress towards one? And that's a tough question. I mean, probably you guys need to answer that more than I do. I've told you that, on the Israeli side, certainly there's interest. I'm certainly happy to make connections and to make introductions where I think they can be helpful to both sides. I don't, and we don't, force anybody to work with or to meet with anybody they don't want to meet with. But if they do, happy to make those connections, and I think they can be very beneficial. So
the IT sector in Palestine is fairly new.
The fact is, we raised a lot of money from people, and we did it not knowing what we were going to invest in. We sort of asked them to invest on faith that we were going to be able to find good investment opportunities. And, that's what a fund needs. And as I said, I think we've invested in 3 terrific companies so far. I would have been happier if we had invested in 6 terrific companies so far, or 5. But, I think the market here is limited. I mean, the pool of great opportunities is limited, certainly so far. And also, there were good reasons, I think, why the first investment we made took us longer to make. I mean, we were doing something that had never been done before. The lawyers we were working with had never put together a deal investing in a Palestinian company before, and the accountants had never done it before. And, so when you're doing something for the first time, it does, and we had never worked, we had never invested together before. So all those things, I think, lead me to, or not feel bad about the fact that, our portfolio is 3 today and not more. I think the key is to make sure we find, some more really great opportunities in the years ahead. And I'm encouraged by what we're seeing. As I said, we've got some interesting things in our pipeline now. What could people be doing better here today? I don't know. I mean, I guess I don't want to generalize. I mean, probably different people can be doing different things better. I think that, if I try to think about what we're seeing, I think people need to probably get a better understanding sometimes of the opportunity for what they're doing, and really understand the market and understand what they're up against in the market. And there are ways to do that. There are ways to do that. Even if you haven't spent 3 years in that particular market already, as some people do, but there's lots of research that can be done these days online. There are people you can talk to. There are people like us that you can talk to that can give some guidance about where to look for that information. And now there are, a few existing startups already that can, I think, also provide important models and advice. I don't want to burden any of our entrepreneurs, but can provide advice to other entrepreneurs.
So what is next for Sadara? You have a anything else being planned for Sadara?
No, I mean, well, yes, but what I said already, we want to build a portfolio of about a dozen companies, so you can do the math. We need to find about 9 more. One more we're about to do. We have some good things in the pipeline, but we're still certainly looking for good opportunities. So our job is to work hard and find the opportunities and show that we can add value to entrepreneurs, because that's going to make other entrepreneurs want to work with us. And we need to help these companies grow and hopefully contribute to those first 1 or 2 success stories, and then hopefully there's going to be Sadara Ventures 2 and Sadara Ventures 3. That's the way the venture business works. If you show that you can produce good returns, then you raise more funds and really help build more companies.
Great. So now we'll open it up for Q&A. You guys want to ask any questions?
Me?
Yes.
I'm interested about the relationship you have as Sadara with your investors. Are they pushy? Are they passive? How involved are they in the investments you make? And is it different with your in Sadara than your other experiences in venture capital?
Okay, that's an interesting question. So I think first of all, we have great investors, as I mentioned, and we have very good relationship with our LPs, our limited partners. That's what you call investors in funds. They're not pushy, and I think they all understood, and we helped them understand that this is a market that's going to take time to develop, and we're investing in early stage companies, and these companies are going to take time to mature and to be successful. So nobody is coming with complaints. Why hasn't there been a public offering yet, or why haven't you sold something to Google yet? Not even Google is saying that yet. So I think they're all, as far as we know, they're all happy and interested and very supportive of what we're doing. We have an investor meeting every year. We had it in Ramallah last November. We introduced them to the companies we've invested in. We showed them around a little bit. A bunch of them came. Not all of them come, of course, but some of them came, and I think we're very impressed. We're very happy with what they saw. We also report to our investors every quarter, telling them what we've done, what the financials of the fund look like, and we go and try to meet with them whenever we can. We realize most of these people don't come to Ramallah very often, so whenever we travel, mainly to the U.S. or wherever, we offer to meet with them. I just got back from California a couple weeks ago and met with a couple of our investors there. So we keep them informed, keep them up to date. We try to, in some cases, make introductions or encourage our portfolio companies to reach out to our any investor who might be able to help them. We also have an advisory board, by the way. In addition to our investors, we have an advisory board which consists of people who really come from the industry for the most part, whether it's the high-tech sector for the most part, venture capital, a couple of them, who can also add a lot of value, and we make those connections too. It's part of the value that a fund can add to companies.
Any other questions? Go for it.
What return? What minimum return do you look at?
You're a tough investor. So, we were asked that question quite often by people when we were out there fundraising. And what we said was, we honestly have, we can't give a number because there's no track record here. All we can talk about is qualitatively why we think we can make profitable investments, okay? And I talked about some of the factors, right? The large market that these companies are going after, the fact that there's very little competition, there's little competition for Sadara, and the fact that it also costs less money in the R&D stage at least, or the development stage, than it does in most other places in the world, even though At the marketing stage, it doesn't cost any less because you still got to, set up shop in the same markets. So, and also, very important factor is what are the exit opportunities, right? Something that's worth mentioning is that when a venture fund invests in a company, you're always thinking about how are you going to sell your investment. In other words, where it's a long-term relationship, but it's not an indefinite relationship. The investor always wants to sell their shares at some point, so you need to show where the exit is going to come from, who's going to buy these companies, right? And again, we explained why we think that there's interest, and we see that there's interest among multinationals, increasing interest in the region. And of course, everybody knows, or everybody talked about Maktub having been acquired by Yahoo in Jordan. That was one example. There have been a couple of others since then. But with people like Google and Cisco invested in our fund, those are companies that acquire other companies, so that could be promising. Anyway, that's part of showing qualitatively why we think we can generate good returns. And again, we're in this to make money and for our investors to make money. But I don't think it's responsible, and we didn't try to be, try to tell our investors that we're going to generate a return of X% or 2X%, because I don't think we can stand behind that at this point. Hopefully, again, after the first fund, we'll be able to point to good numbers.
Speaking of return, also equity, how much you require equity and how often do you evaluate your startups? And
We look at a company, we kind of try to figure out more or less what we think is a reasonable valuation for the company at the time of our investment, and it's based on a lot of factors, including how far along is the company, how experienced is the team, what's the upside potential, how much more money is going to be required later on, what's the exit potential, and so on. At the end of the day, we want to have a significant stake in the company, and we want the entrepreneurs to have a significant stake in the company. What is significant translate into? It depends on the specific situation, but I would say that kind of as a rule, and I'm not talking just about Palestine, because I don't think it's really any different from other markets. As a rule, we, Sadara, don't take a majority in any company, or we're not likely to take a majority in any company that we invest in. But the investor group as a whole, and I mentioned before that we look to bring other investors in at some stage into our companies. So the investor group as a whole is likely to have a majority of the company's equity. But that's after some significant money has gone into the company. I'm not talking about a few tens of thousands of dollars, but significant money has gone in. The kind of ceiling for that is you have to make sure the entrepreneurs and the employees are sufficiently motivated that they're going to get a good outcome if the company is successful, because they're the ones doing virtually all of the work on this. As far as how often do we value the companies, we don't. We have to do it formally for our investors, but that's meaningless. We do that every quarter. Really, the only time you look at valuation is when you go out to do another round of financing. And that depends on how much money has gone in the previous round, and how much the company is spending, and then it's also, if it's a round in which a new investor is coming in as a lead investor, then it's usually that investor that sets the valuation. And we are very likely to want to participate, to continue investing in the company. So maybe that gives some indication.
Another question. Knowing what you know today for the Palestinian market, if you did the research before and had the data, what or maybe if you were about to raise another fund, what?
No, I don't think it was too, it wouldn't have been good to raise a lot more, but if you ask me, am I confident that we're going to end up doing what we said we were going to do, which is build a portfolio of companies? I feel very, very good about that. So I'm glad we have the $30 million there. That's how I would answer that.
In case that there's success that employees counters, obviously. But what's the payoff to the partners of the fund? So how is that structured? Is it a success fee? Is it a management fee? If the total pool of funds, like, how do venture capital funds usually do that? So what's motivating you guys to do a great job?
Okay, well, let me answer the first part first.
It's a social impact.
Right, so the way all venture capital funds work, any venture capital fund that I've ever heard of, the management company of the fund is compensated both by a management fee or a salary, if you will, or an amount of money that's based, it's a percentage of the money in the fund, and that goes to cover the expenses of the fund. If I said I just traveled to California or whatever, if we, do due diligence on a company, it covers all the, we have an office, it covers all the operating expenses of the fund, and it covers salaries for the managers of the fund. So that's the management fee. And then what's generally, or hopefully more interesting is profit participation, okay? And the management company generally, I don't want to talk about Sadara specifically, but essentially standard practice in the industry that the management of the fund gets shares to the extent of 20% of the profits of the fund, okay? So first the investors get all their money back. Very often they get more than their money back because there's what's called a hurdle rate, okay, where you have to give back a certain return to the investors, not just all their money back, but some on top of that. And then the managers start to share in the profits as well. Generally, unless you're managing a large fund, and $30 million is not a large fund in the venture business, nobody's getting rich off of management fees. Okay, the upside, the way to align the interests of the managers of the fund with the investors in the fund is through that profit participation mechanism. Now, you asked about what's motivating us. Why? Well, that is a motivator, and I said that, I think it's true of Syed and myself. I mean, we wouldn't be doing this if we didn't think, there was a way to make money doing this. We're spending a lot of time doing this, and it's at the cost of doing other things that could make money. So we should be making money doing this, and hopefully we will. But most of the money is going to be made if you guys build successful companies. But I'd say also, again, I think I can speak for Syed and myself, that we're not doing this just for money. Because there are lots of other ways to make money and lots of other places to make money, and I think we both have alternatives. But I think we both are very passionate about the belief that this is an extremely important thing to do, and that it's something that nobody else has done, and that it just has tremendous upside, which is not just financial, but social. I think if we succeed in investing in companies that can really create jobs and create an industry here, and create a better place in Palestine. I think it'll create a better region. As an Israeli, that's very important to me personally, that's a huge factor behind why I'm doing this, at least.
So I think the foundation of the Israeli startup scene was really on innovation, and specifically like technological innovation. What we're seeing in Palestine is more likely of imitation. And some argue, some investors and entrepreneurs argue that imitation is more valuable than innovation because, it's low risk, it costs less in terms of R&D and so on. But then, you have the other school of thought that argues that startups are important for developing specific niches and that won't otherwise flourish in a conventional market. What's your opinion about that in general, and where do you see Palestine? Because in my opinion, I said I see it more imitation than innovation.
Good question. Look, I think you're right that Israel certainly was, all about technological innovation. Certainly in the early days. I think, by the way, today it's less about that. And a lot of what you're seeing and a lot of where the money is going in Israel today is not really technological innovation. It's marketing innovation, it's content innovation, it's business model innovation, but it's not, you know, or it's not nearly as much about technological innovation as it was. Okay? So I think that, you know, it's a different period. And, you know, when the Israeli tech scene started, there was no internet, right? And today there is. And that has created huge opportunities, many of which don't require deep technological innovation. I would say that what we're seeing here is, not sure I would call it imitation, but I would call it taking models that have worked in other places and applying them to a different market. And by that I mean primarily bringing it to the Middle East and North Africa market, which is, you know, as I said, a huge market and a hugely underserved market. I don't see, although we have, you know, we have seen a few examples of innovation, real technology innovation among the companies we've looked at. But let's face it, I don't think that's where Palestine's strength is today. I think that can come, and it very likely may come, but it's not going to be in the first generation of the companies that we're investing in, very likely. Maybe with one or two exceptions. You know. But I don't think there's anything wrong with that. You know, I think there's a huge opportunity, and it's an opportunity that's now, and it's got to be capitalized on now. And it takes a lot of innovation of a different kind, but it does take a lot of innovation to figure out how to address those opportunities, you know, in a smart way, in a cost-effective way, in a better way than anybody else is trying to do. So, you know, ask the guy sitting next to you. I mean, you know, is there innovation in Yam Safa? I think there certainly is. I mean, cardless bookings, you know, that's, I mean, I told you should trademark the term, because I don't think anybody else has done it, right?
Yeah.
That's innovative.
You just told
Sorry.
I'll be already in the process.
Okay, right. You know, that's innovation, and that's great. So it's not, you know, the next chip that's going to go into the next cell phone. Okay, it's not. But that's not where, you know, I think where your competitive advantage is today. Maybe in the future.
I'll follow up on that. Maybe it's, and looking at the region and what's happening in the region, what sort of clustering do you expect to happen in the Palestinian tech entrepreneurial scene? And the second question is, looking at the investments you've done so far, they're mostly regional, except for the last one, in terms of their markets. Is there anything you see, or it just happens to be that the markets are the Middle East, or is there something that needs to happen, or what would it take to see a startup marketing globally?
That involve internet applications for the Middle East. Okay, and I think that's a very legitimate place to focus for all the reasons I've said. And you know, someone's going to do it. So is it going to be entrepreneurial teams in Amman or in Cairo? You know, it may as well be entrepreneurial teams in Ramallah. At least some of it. You know, why not? And I think you have an opportunity. So, and it's a unique opportunity. You know, right now. So I would probably think that that's where you're going to see more of the interesting things. Internet, mobile, and it also fits with the capabilities of the sector here. You know, these things don't require a ton of money to create. They can be tested quickly. And you know, you can grow a company pretty quickly in this space also. What was your second question?
It was about what would it take to
market globally, yeah. Look,
global
Right.
market company.
Look, I think when you're trying to market or create something that's going to reach global markets, i.e. the US, Europe, Asia, you know, the bar is higher. You've got to have a greater advantage. The markets are farther away. It's a different culture. It's a different language. And there are lots of other bright people and bright teams trying to go after those markets too. I I think you have an advantage, we have an advantage, when it comes to marketing to the Middle East, all right? Let's face it, same language, same time zone, same, more or less same culture, and not that many people doing it. So, to me, it makes a lot of sense to focus on the Middle East and North Africa markets for the most part. Again, a game developer, maybe there's certain things that make sense to focus here. Maybe there's certain things, and I think they have something that can address global markets. Hopefully, we'll have more. Some of the things we've looked at and are looking at are targeting markets that are not just in the Middle East and North Africa, let's say. But most of them are, and I think that makes a lot of sense for where the industry is and for where the advantages are.
Just an idea. Don't you think that it's better that since you have a lot of experience in that, maybe you can recruit people, do some market research, trying to find opportunity, then find entrepreneurs who are willing to spend time and maybe if you do some innovation, maybe here will have better yield. Have you ever thought about doing this or adding things about traditional what we see?
First of all, I mean, it's a good idea. I'm not sure it's innovation, by the way. I mean, we've done that in Israel, okay, where we sort of come up with an idea and then find an entrepreneur, or where we bring an entrepreneur who doesn't necessarily have an idea yet, but somebody we want to back, and together with that entrepreneur, we go and look at opportunities and then make a match. So we're certainly open to doing that. It's something, by the way, that we've talked about. Certainly both parts of that. But I guess it's just a matter of time, more than anything. If you talk about trying to flesh out an idea ourselves and then find a team to do it, it does take a lot of time, and then you might spend all this time kind of developing an idea and not find the right entrepreneur. So I guess we'd rather start by identifying the teams or the entrepreneurs, and then work with them to do it. But it's something that we certainly might do. Well, I guess first question depends whether you're comparing it to Israeli companies today or Israeli companies back in the late 80s. If you're asking about Israeli companies today, comparing the challenges and the obstacles. Look, for the most part, at this stage, Israeli startups have a lot more experience in that, right, in the team. I mean, many teams of Israeli startups have people who've, either done a startup before or have been a VP at a startup before, and that's very helpful, okay? And that, for the most part, doesn't exist here yet. It will, but, not yet. Obviously, the difficulties of travel that some entrepreneurs have here make things more challenging, without a doubt, because you've got to get to your target market and you've got to understand what other people are doing, and it's important to meet with other people and to see how other people have done things. So those, to the extent people are limited in their ability to travel, that's an additional challenge, certainly. I think for the most part, the challenges are very similar, and doing a startup is hard, and you may not succeed in developing what you're doing. You may have a falling out with your partners. You may find that there's some competitor that you didn't think about. You may not have enough money or succeed in raising the next round of financing. There are lots and lots of challenges, and being an entrepreneur is not the easiest job in the world. But for the people who are willing to try and give everything to overcoming those challenges and just focus on getting over them, they can do that, and those are the kind of people we look for. So we try to focus more on the opportunities than the challenges. We know the challenges are going to be there, but let's just run as fast as we can to go after the opportunities. As far as Safa or Palestinian companies' time to exit, I'm not sure I see, look, I think the challenge is going to be, or the difference is going to be that, you know, I've got a slide in some presentations I do showing the logos of all the multinational companies that have acquired Israeli companies, and it's an incredible, incredible slide, really. That doesn't exist here. It's a blank slide, right? And we need to put those logos on the slide. And so my point is that there are many buyers of technology companies who know all about Israel and Israeli technology companies, and who are looking for Israeli technology companies, and who have offices in Herzliya so that they can identify Israeli companies to buy. You don't have that here. We don't have that here. So that's got to come. That is a challenge. I think that, you know, it's a little bit addressed by the fact that, first of all, you have people here who have been involved in some of these transactions. You have, among our investors, companies that have been involved in some of those transactions. And I think one of the things that we need to do, we as a sector, is to develop relationships with those potential buyers, you know, sooner rather than later, so that when the companies are ready to exit, you don't have to start explaining to people what, you know, Palestine is and where it is, and you know, why they should think about coming here, and what the Middle East is, and so on. So hopefully it won't take longer, but we just need to be smart about it. And it's not that every employee has the same, you know, outcome or the same fate after an acquisition. Stay on for a certain period of time, whether it's 6 months or a year, typically. That's not always the case. Managers and the employees in the company to now be part of, you know, a larger corporate entity and see how that works. Not for 10 years, but to do it for a year, I think is probably a unique and very, and probably buy themselves and their family a nice, I don't know, nice car, or a nice house, or whatever, because they worked very hard for a long time and haven't really, they're hopefully getting rich on startup salary. So, you know, and that's totally deserved, right? After they do that, you know, entrepreneurs, so they're gonna, you know, go hang out at the beach the rest of their lives. It just doesn't work that way. They want to do the next startup, and it might take 6 months, or it might take a year, or it might take a month, or they might have already been thinking about the next startup. What we see is, you know, a successful entrepreneur going back and doing it again. And that's great. Did I answer the question?
Yeah, but you know, just actually the core, like, you know, Waze, or maybe even a smaller one. I mean, Waze is an outlier, but to senior level employees, you know, what are the financial returns? I'm sure there's a lot of variance, but
yeah, first of all, I think Waze is probably not the best example, just because it was a big exit, you know. But the Israeli companies that were going public kind of in the early 90s, you know, the valuation at exit, and I'm talking about when they were publicly traded, was typically under $100 million, okay? So, and I think that's probably likely that founders and really the few key people in a team should make, you know, if the exit is tens of millions of dollars, then, you know, those people should be making hundreds of thousands of dollars, I guess, is the order of magnitude. It's not that everybody in the company becomes a millionaire, but people can make 4, 5, 6 years or more building a company. Does that answer?
In order to know their exit strategy, or is it usually up to the investor to see that potential and connect the dots for the entrepreneur?
Good question also. I think at some stage, exit, not that they need to know exactly to whom or exactly when, but you know, the main thing is that they figure out and explain to us or work with us to develop a plan that shows they can build something in those companies. Yeah, we don't expect that. It's something that we need to help them develop and make introductions for. They need to go out by being at conferences and you know, going and meeting with people and hopefully having other things that, you know, I think gets developed over time. It's not, I don't want to overemphasize this exit thing. It's not like every meeting we have with entrepreneurs, we're talking about, okay, when's the exit and who are you selling to, or exit strategy, and, you know, it's more likely than not going to be a sale to another company as opposed to a public offering, let's say, which is always, except for the year 2000, always the more common outcome for successful companies.
So, from what you've seen so far over here, obviously it's like a very small limited sample, but there are barriers. I know because, we've talked about that it's mostly imitation instead of innovation. So usually when it's imitation, it's more likely to be an acquisition maybe from a multinational, but, for a Palestinian company to go public and, one of the more mature stock markets worldwide.
Not every company that goes public is, about technology innovation either. Plenty of Chinese companies, are going after, U.S. Profitable for a few quarters. It was very, very different in the early 90s. Okay, so very few companies are going public, and very few smaller companies are going public. That's number one. It needs to be, understood. Number two is I think most of the companies here are going to be addressing Middle East markets. Okay, not U.S. as we talked about before, not U.S. markets. So it's going to be much more difficult for U.S. investors to really evaluate what that means and what the future, what the projections are for the company, and that's what taking a company public is all about. You want to show the upside potential, right? And it's going to take time for that to be understood. So I guess those, and there are probably going to be some, and you don't have Wall Street bankers hanging around Ramallah yet, I don't think. That's also, those are relationships that need to be developed, and that's going to take time to get Wall Street to take notice of, what's going on here. And, something we should do, but you need to have something to show them. So it's another year or two maybe until there's, make it worth their while to make a trip here and see what's going on. And maybe we can introduce people, like you. When you go to the States, you can start meeting some of those people. But that's a process, it's going to take time. Could it happen? Could happen. But I think it's, for this, in our portfolio, I'd be very surprised if we had a public offering on NASDAQ, certainly. As far as the Palestine Stock Exchange, maybe, but I don't think it's very, certainly not familiar with technology startups yet, So, inshallah, the Tel Aviv Stock Exchange, But that's not such a great exit either because it's very low liquidity. You don't find many Israeli companies even going to the Tel Aviv Stock Exchange. Again, I'd be very surprised if we saw public offerings on NASDAQ out of this, first generation of Palestinian tech companies.
Yeah, that is.
Well, thank
No,
you.
for any
Next month, we'll also have another event, and it's Women's Month, so we'll have a Palestinian woman entrepreneur as our guest. So looking forward to seeing you guys there.
Yay.